Well, welcome back to our live panel session on the topic of IT risk management, new software standards for operational risk and complexity. So operational resilience is a huge theme this year, and I'm sure going forwards. Regulators looking to set new standards, shared standards for operational resilience, which include standards for software risk and IT risk more generally. And our panel that's going to discuss these topics are drawn from academia and from finance. And as I introduce each speaker, I'll ask them to tell you a little bit more about their background. I'm going to start with Keith Ware from the Judge Institute at Cambridge. I've known Keith actually for many years. He was for a long time at IBM. But one of the projects Keith's involved with at Cambridge University at the Judge Institute Business School is the Regulatory Genome project, which is, I guess, the other side to this coin, this topic of IT risk management at financial firms. In brief, it's a project to establish how regulators can use AI to supervise markets and gather information on markets. I hope that's a fair summary, Keith, but please do tell us a little bit more about that. You're on mute. No, we can't hear you. Keith, just while we're sorting that out, perhaps we'll come back to you, Keith. Can we come to you, Colin Wynd, the Clearing House? Thank you for joining us, Colin. Still early in the morning your time in New York. Can you tell us a little bit about the Clearing House and the challenge of achieving standards of operational resilience in payments, which is your core marketplace?
Yeah, so we have, I'm Colin Wynd. I'm responsible for the technology and real-time payments, which is one of the new payment rails that's being implemented in the last 40 years in the United States. And so we have a lot of challenges because we are a systemically important financial utility. And it's interesting for me because previously I was at the Federal Reserve Bank of New York. I was actually working for a regulator. Now I'm actually working in a company that has actually regulated. And so for us, because of just the sheer dollar volumes that are going across our systems, it's critical that we look at resiliency. And it's timely that we're doing this talk, given what happened actually at the Federal Reserve System, where had an outage a couple of weeks ago, and I think that was on CNBC. It was kind of widely publicized because of the criticality of these systems. And at the Clearing House, we're no different there with the level of criticality, with just the sheer number of ACH payments and real-time payments and the chip system as well.
Good. Okay. And what do we know about that outage, and what do you think it tells us about I mean, we've also seen, for example, over the past 12 months, a number of high-profile problems at stock exchanges, at the Australian Stock Exchange, at the Tokyo Stock Exchange. There's clearly a key challenge at exchanges in terms of performance management and in controlling and monitoring the complexity of connectivity in their markets between themselves and their customers, but also in terms of upgrading software. What's the parallel situation in payments markets? Are firms moving towards these shared standards? And can you tell us a little bit more about your work at the Clearing House in that respect?
Well, I think from looking at the Federal Reserve, right, what they are probably looking at is limiting the blast radius, right? And so it wasn't just one of the payment systems that went down, it was actually all of them. So they probably need to look at can basically have their systems be somewhat independent from each other, so one outage won't impact all of their major payment rails. And this is what we look at the clearinghouse. We look at things like how do we minimize the impact, right, across the system. So there should be no commonality between the systems. And again, you get into this concept of blast radius. How do you minimize that? I think some of the cloud-based services like AWS or Azure or GCP very much look at how do they limit the blast radius, just because an outage has such a big impact. And you see how they've updated their systems from all the way from the underlying physical data centers all the way up to the interconnectivity that they have. They actually limited kind of the damage that can be done by a single outage, as well as some of the technologies that we're looking at is instead of having the classic, I've got a database, either active-active, active-passive, how do you have it so that there is a multi-level redundancy? And I think that's where we need to be moving towards newer technologies so we can actually reduce the blast radius of these outages. Whether we like it or not, there's always going to be issues with infrastructure and the underlying and the application. How do you limit the outages and the potential for problems?
Okay, and you mentioned just a minute ago your experience at the Federal Reserve Bank of New York. How do you see regulators managing the supervision of these standards going forward? I mean, in some parts of the world, the Singaporeans, for example, the Monetary Authority of Singapore, the Swiss regulators, for example, are well known for having a more prescriptive approach to the management of software risk. The Monetary Authority of Singapore, for example, has written guidelines for IT risk management that include guidelines for software testing. So, for example, they suggest that it's not a good idea for developers to test their own software. That there should be a Chinese wall between developers and softwares, which to some extent, might even mitigate against DevOps working practices, for example. But they have written guidelines. But in the United States and in the UK, and I think in most regulatory domains, regulators really only starting to look at this issue of operational resilience and how you might codify it, how you might set standards. And of course, they're asking financial firms to suggest ideas themselves. There are working papers out there. How do you see this moving forward? Do you see regulators becoming more prescriptive?
Yeah, I think so. And I think what we need to do is trying to define more standards on what we mean by operational resiliency. And there's certain aspects of it. If you look at, some of the recent breaches are really been around open source software and open source vulnerability management, and looking at the supply chain of all of your software attributes. And I think that's where some of the regulators really start to drive into how are you handling your vulnerability management, how are you actually handling your open source, so you can actually defend against either zero-day attacks and be able to respond much more effectively. And we're just seeing the sheer number of cyber attacks. They're becoming a lot more complicated. So instead of just hacking into your system, they're actually going up the supply chain. And we've seen that it's been in the news much more frequently. Last one with Microsoft. There are previously ones where people are actually hackers are actually now going against and modifying the open source software. And so people need to be very careful about the libraries that they're using and looking at being able to react quickly when there is a vulnerability. So I think the regulators are going to start to look at that just because it's been so well publicized. And I think we need to start to have some standardization around that.
That's really interesting. And what about benchmarks for the resilience and quality of code? Do you think that those are possible at an industry level? So, for example, I mean, we have different methodologies for evaluating code quality. There are standards for set by ISO. There's static analysis, which Nadine was talking about earlier in the agenda today. There are repositories of code against which one can benchmark the quality of one's own software. Do you see, I mean, for example, in your market where there is a huge complexity in connectivity, do you see participants being able to agree to certain market standards for code quality?
I think that's going to start to emerge because of the interconnectivity of these systems, right? We're moving away from a batch-orientated payments rails to more real-time processing, and that means that you're very much more tightly entwined. So with batch-orientated, you know, your counterparty could be down for a while, and it's not really that big of a deal. With now that we're integrating with real-time payments, any kind of slight outage anywhere along the system has a much bigger impact for the completion of transactions. So I think we really need to start to look at kind of a 360-degree view of software quality, whether it's actually code quality in the way that you've written it, and there's now a lot of tools out there that actually enable that, including static analysis and then dynamic analysis. And there's different types of tools now, and they're getting out into the market quite effectively. So I think it needs to be a really 360 kind of degree view of how we define software quality. And now that we're getting into DevOps, the other aspect is, when do we break the build, right? Do we break the build at certain software quality limits, and how do you define that? And what's the risk-based analysis on that, right? For, you know, I love comparing it to the cafeteria menu, which is really low risk, so we don't really care too much, all the way up to mission critical systems, such as payment systems, where the software quality demands need to be extremely high. So I think you need to have a risk-based analysis on that as well.
Okay, great. Well, thank you for that introduction, Colin. Perhaps we can come back as a panel to talk about market standards again. But I think we can return now to Keith. Keith, I know we had a little glitch with the sound there, but I think we can hear you. Would you mind introducing yourself?
Yeah.
Yes, that's perfect.
So it's Keith Ware. I'm a fellow at the Centre for Alternative Finance, as you said. Okay, part of the Judge Business School at the University of Cambridge. So I think you asked me to spend a couple of minutes just on what we're doing in the context of machine readable regulation. I think we all know the extent, complexity, and cost of existing regulation is something like a 700% increase in the amount of regulation since the financial crisis. So it's a huge amount. And it's something we've been focused on in a couple of contexts. One is we have been teaching a course for global regulators. We now have had about 700 to go through this course. It's an 8-week course. So we've have a very good convening power with the regulatory community. Then in parallel with that, we were given a grant by the Midjar Foundation, which was founded by Pierre Midjar, the co-founder of eBay. And that was to use machine learning as a means of being able to work out what regulatory obligations there are on fintech. So we put the two together and basically have built what we're calling, as you mentioned, the Regulatory Genome Project, which is an effort to sequence the world's machine regulations. So we're using the kind of equivalent words as the human genome. So basically that means having web crawlers that go around all the world's regulators in terms of what's published, machine learning to interpret that based on a common taxonomy. And the beauty of the model is that there's a public good element, which is facilitated by the university, which is providing all of this information into the public domain on an open access basis. And then we have a private use, private good model, which is an affiliate and a spin-off from Cambridge, which is focused on engaging with the industry. And one of the, to the topic of this conversation, one of the first taxonomies that we built and are codifying the regulation is on operational resilience. So obviously, as we've said before, that's a hot topic in this area, especially for financial markets infrastructure, as Colin mentioned, for the clearinghouse. So we see this as being a key means of being able to reduce the cost and burden of regulation without compromising on the quality, hopefully improving the quality in terms of machine learning working alongside the human element.
And in practical terms, how would a financial firm use this database? So, for example, I mean, there was a Bank of England paper on the topic of cyborg supervision, I think they called it, and they pointed out that the PRA, Prudential Regulation Authority's handbook, has the same number of words in it as War and Peace. So, if you can sort of simplify this by identifying, the information nodes in the handbook, quite simply, you can sort of make it simpler by turning it into an electronic handbook. But what you're talking about is something far more complex, because you're looking at the overlap between different regulators. Is that correct? I mean, how?
It is. Yeah. So, for example, we're working with a global bank at the moment, which is nominated, which they have business in, and looking at the AML regulations on those 3 countries, one of which is Spanish speaking. So there's a machine translation element to it as well, in order to understand what the differences are in terms of obligations, to make sure that they are fully compliant in that kind of context.
Yeah.
So the beauty of this approach is to have a standardized version of the regulatory interpretation. So we're working with over 22 regulators so far on the public goods side, so that they are testing and validating the taxonomy we have for cybersecurity, for operational resilience, for AML, etc., which is a real differentiator in terms of that regulatory engagement. Together, we're working with financial institutions, like I mentioned, in terms of how that data then is bridged into the internal taxonomies they have for regulation, and then implemented in terms of the control systems that manage compliance within those institutions.
Great. Well, I guess that there's more information on the Judge website for anybody who's interested in that project.
Yeah, regulatorygenome.com.
Regulatorygenome.com. I also wanted to ask you, I mean, I asked the same question to Colin. I mean, do you see regulators in general becoming more prescriptive in terms of having written guidelines on operational resilience and standards for software quality?
Yeah, certainly kind of top down, I would say. Clearly, there's a lot of guidance, both at the EU level and the UK level, for instance. So as you may know, I do some work on the exchanges side, and I specifically sit on the Technology and Operations Resilience Committee of the London Metal Exchange, which is an example of an FMI that has those obligations in terms of operational resilience. And clearly, the FCA and Bank of England have specified, as I said, a top-down approach, defining business services in the first instance. What are the business services in a well-defined manner, understanding who owns those services, and then critically understanding all of the dependencies on those services, both from an operational, IT, and infrastructure point of view. And obviously, when we talk about IT, we're talking about software specifically. So all of the key levers and metrics in terms of quality, security, cyber resilience, etc., all of those dependencies need to be understood and mapped to the business service definition and the business service ownership, and then critically to be scenario tested. So what if for example, the recent cyber exposures that we've had with rogue software coming in from commercial providers, understanding that as a scenario, how will that trickle up so that the full set of dependencies are understood and the appropriate decisions are taken in terms of recovery, for instance.
And you mentioned your work at the London Metals Exchange, the LME. Are exchanges, is there a project among exchanges, for example, to share standards and agree standards? Are you aware of any developments there?
Yes, I mean, I can't speak specifically for the LME, but obviously there's the World Federation of Exchanges, which, as you know, is a great convening point in terms of the world's exchanges, and kind of approximately 100 exchange members, for example. And I think that does a great job in terms of bringing together those participants in the global exchange network to share best practice and to collaborate on things like cybersecurity. Shape that. Both from a regulatory and operational resilience and a cyber point of view, that's a great convening force.
Yes, and do you think? I mean, again, using exchanges as an example, but it would be equally true of banks or insurance companies. We saw, for example, under MiFID, one of the requirements of the Markets and Finance Directive, the EU directive, was that financial firms in capital markets should self-certify that their trading algorithms would not disrupt markets. And I guess that requirement dates back 4 or 5 years now. This isn't something, as far as I'm aware, that actually made a great deal of progress. I'm not saying it was quietly dropped, but it hasn't. There hasn't really been the follow through at the EU level. Whereas there are unilateral efforts by some regulators. The Japanese, for example, we've heard at our one of our events recently. Morgan Stanley was talking about how the Bank of Japan is requiring capital markets firms to put parameters of risk and codify them around trading algorithms. So there are these sort of isolated. One of the challenges that financial firms face is that they maybe work across 50, 60 different regulatory domains with different requirements. So again, with exchanges, for example, I'm not aware that there's any sort of supranational entity or supranational regulator that's actually leading an initiative here. But at the same time, exchanges, not the LME, have had some high-profile problems over the past 12 months. So I'm just wondering, the extent to which the WFE, for example, or exchanges can get together and help each other. Because there's also a sort of competitive element, isn't there? If there's a problem at one exchange, it's not necessarily bad for another.
Well, yes, I think that's true. But obviously, there's a common good element to this in terms of sharing experience. Cyber is a great example of that. I think understanding the different approaches taken by various exchanges, because it's all in their mutual interest to learn from each other in terms of having the highest level of protection and resilience that's possible. So I'm sure that's obviously something the regulators would support in that respect. But clearly, besides WFE, there are entities like IOSCO and others that have a significant input to this kind of topic as well. Okay,
well, thanks very much, Keith. Colin Ware, we'll turn to you now. Colin, you have a different focus insofar that your specialisation at Bank of New York Mellon, I understand, is in evaluating RegTech solutions. Can you tell us a little bit about your role and what you're doing in that respect?
Yeah, sure, Matthew. And I've already made a note of Keith's website there. Actually, that's very interesting. The regulatory genome. So I'm a regulatory product manager. So I guess twofold really. My role is to make sure that our products and services comply with regulations. Obviously, we are a major financial partner for many of our clients. And really, we need to make sure that we're compliant to make sure that our clients are also compliant, obviously. But also I have another role really, which is to make sure as well that we're helping our clients with regulation. I think just, the stats and just how many regulatory updates hit us all from many angles every day now. It really does mean that the regulatory kind of onus is on many different client segments. So really, our clients will come to us because we have a lot of the data that they may need to ensure that they comply with regulations in terms of reporting and filing to their national competent authorities, for example. And so we very much have an onus on us to make sure that we can help our clients with regulation. And that tends to be either obviously some internal programs looking at some data initiatives and data strategies, but also working with RegTech companies as well to see if there are nimble, agile solutions that can help in particular marketplaces and also with particular regulations. I think really what's happened over the years since the economic crash, I guess, is that regulations have tended to be almost treated tactically. I guess each regulation is almost treated on its own merits. Solutions and sort of technology initiatives tend to address each regulation by regulation, if you like. But I think really what we could all do as an industry and what we should all be working towards is to see how we can be much more strategic around regulations and obviously lots of the good stuff that both Colin and Keith have been talking about it's kind of that future vision of how we can make things much more standardized and common taxonomies and all of that sort of thing that will actually, is music to my ears, basically.
Of course, there's a big overlap here. Thanks, Colin. With the management of vendors, third-party vendors, vendor risk management, if you like. And it's something a couple of our speakers have referenced already this morning. JP Morgan was talking about this. But there is a trend among large financial firms, I don't know if it's specifically true of BNY Mellon, to reduce the number of your external vendors. I understand that one of your major large money center bank competitors has something like 7,000 external IT vendors globally, and it's trying to reduce these by more than half. In doing so, it's reducing its vendor risk management challenge at a time when everything's getting more complex. Is that part of your purview as well? And how does that fit with the evaluation of RegTech solutions?
Yeah, I mean, I don't think there's an ideal number, to be perfectly honest. I mean, they obviously have an awful lot. If they got 7,000, I don't think we would only be anywhere near that figure. But I think in terms of actually providing much more of a consolidated kind of single portal to your clients as well, then that obviously has got to be something that you need to look at in terms of you don't necessarily want a client having to interact with you in say on 10 different systems, purely because that's all you've got for each regulation, if you like. So I think absolutely that there should be some kind of review and rationalization. If you can identify common data, common strategies around certain regulations and how they're reported on, then absolutely it should make sense that you're trying to provide almost like a one-stop shop for clients, and really giving them just it's a single login, if you like, and then you self-serve and can choose which regulation you need to report on. That to me would be a great sort of forward-looking vision and strategy, definitely.
Yeah, so Keith was talking about there being a big incentive for exchanges, for example, to share information and best practice in relation to cybersecurity. That's an obvious example because nobody likes cyber breaches. But with RegTech solutions and with other third-party apps, do you see the same potential for cooperation?
Yeah, I do actually, Matthew. Yes, and to some extent, no reason why not. I think some of the regulations recently, and I think we're just talking about AML. If you look at things like SRD2 recently, which was very much reshaping the market in general, and also I think something like CSDR as well, which is really trying to help the whole community, if you like. Then absolutely, I think if there are solutions and we can all help drive what are very good and meaningful solutions and help RegTech companies to interact with the major financial service providers, then it would make sense to me, definitely in those sort of situations where we're all trying to just improve how the market runs in general, and the exchanges are part of that as well. So yeah, absolutely.
Okay, thanks. Colin, Wynd, can I just return to you as you spoke first, Colin, just to now you've had a chance to hear Keith and Colin Ware talk about these various initiatives, and to talk in particular about this issue of vendor risk management. What would you like to, would you like to share your thoughts on those key trends? I mean, vendor risk management, for example. What changes do you see at the clearinghouse in this respect?
Well, I think we need to look at the vendors from a holistic point of view, from not just the clearinghouse, but also across all of the end-to-end systems, right? So if you look at the recent issue with Microsoft and Outlook, or even look at the SolarWinds hack, right? It's the fact that there is a concentration in certain areas on just a few vendors, and the risk there of having only a few vendors involved in this process actually increases our risk compared to if we actually had multiple different network monitoring solutions or multiple email solutions. So it's these systems that I think we need to be very careful about how we actually handle vendor management and the risk associated with vendors.
Okay. Gentlemen, I mean, time flies. I'm afraid we're at the end of the session and we have to end on time. But thank you very much for sharing your thoughts. I'm going to close this session, but if you want to move to the next session, which is a presentation by Izzy Azeri, the co-founder of Mabel, who's going to be talking about accelerating digital transformations with automated testing, just click onto your timeline top left and click on that session. Okay. Thank you again, gentlemen. I hope we'll be speaking again soon.
Thank you.
Okay. Thank you. Bye.
Bye.